According to the BVP Cloud Index, it is up 900% since it was formed in August 2013. That quadrupled the performance of the NASDAQ, aka the US Tech and High Growth Index, and 9 times that of the S&P 500 and the Dow Jones, which represent the largest US companies. At 900% over the last 7 years, that's a compounded annual growth rate of 37%. So what is the cloud? The cloud is basically your modern-day form of IT services, but through the internet. For most people, it's an online platform that's used for data storage to hold their thousands of selfies, as well as telling coworkers that they're online while working remotely. Instead of needing your own physical data storage device and servers, just having connection to the internet allows users to access their files and documents that are kept online. For businesses, the cloud would also be for managing huge inflows of data, security, developing software, and using customer-facing applications. Businesses can then depend on these cloud providers to reduce their IT costs, as well as power up their computing capabilities around the world with dedicated platforms. Within the BVP Cloud Index, here's the 10 fastest growing cloud companies in terms of sales growth. Most of these companies have only been around in the last decade, such as Zoom, the video conferencing software where students play pranks during lectures, and Shopify, the e-commerce platform where most people dream of running a successful online store, only to have made more money working at McDonald's. When put on a list, since they IPO'd, here's how much the 10 names would have roughly gained in market value, grew in their sales, and increased in their total employee count. You'll notice that most of these companies have on average doubled or tripled their results within a few short years. So clearly, there is some significant growth going on at these high rates right now, and there's still a long runway, even if it starts to moderate. According to market research firm Report Linker, the global cloud computing market is expected to grow 18% per year until 2023. If we have 3.3 years left until the end of 2023, that implies that the global cloud market will grow by 72% over that time period. For those that don't know, there are 3 prominent cloud platform providers, which are Amazon Web Services, Microsoft Azure, and Google Cloud. Other notable names include Alibaba Cloud, IBM, Dell, Hewlett-Packard, Cisco, Salesforce, Oracle, SAP, Workday, and Adobe. I'll just quickly talk about the big 3. According to another firm called Canalys, as of July 2020, Amazon had a 31% market share of the cloud, Microsoft Azure had 20%, Google Cloud had 6%, and Alibaba Cloud had 5%. The 4 companies combined now own 62% of the cloud market. Amazon Web Services, or AWS, is the largest cloud player with $40 billion in sales and is likely the size of the other big 2 put together. CEO Jeff Bezos says that Amazon's cloud market share leadership can be attributed to having a 7-year head start before the competition even started. That gave him a first mover's advantage of evolving their services and getting customer adoption of the platform. Amongst customers, AWS is a preference because of the breadth and depth of its cloud services. Some notable clients of AWS include Netflix, Disney, Johnson & Johnson, Airbnb, and Nike. Right now, revenues from AWS represent 12% of the total company's sales. Historically, AWS revenues have been growing by roughly 30 to 40% per year. Microsoft Azure is the second largest cloud player, with exact sales numbers still a mystery. Microsoft's Intelligent Cloud segment, which includes Azure and other services, has $50 billion in sales, which represents roughly 35% of their total sales. You might be familiar with Microsoft Azure at the enterprise level from using Microsoft Teams and sharing documents with coworkers. Historically, Azure revenues have been growing by roughly 50 to 60% per year, and the overall Intelligent Cloud segment revenues have been growing by 20 to 30% per year. Azure tends to be a popular choice with C-level executives who have a long-standing relationship with Microsoft, and they know that they can consume a great deal of their enterprise computing needs all in one place. Some notable clients of Azure include Coca-Cola, Uber, Ford, Hewlett-Packard, and 3M. Google Cloud is the 3rd largest player with $12 billion in sales, which represents 7% of their total sales. You might be most familiar with Google Cloud through the G Suite applications like Gmail and Google Docs. YouTube is also using the same Google Cloud infrastructure to manage the billions of uploaded videos. Although just a newly created business segment for reporting purposes, historically revenues have been growing by roughly 50% per year. For customers, it's usually users or organizations that want to engage with Google for code development of software. Particularly, users seeking good AI and machine learning capabilities along with good security have been gravitating towards Google Cloud. Some notable clients of Google Cloud include Spotify, Home Depot, Bloomberg, Snapchat, PayPal, eBay, and Target. Putting the top 4 cloud names together, here's a table of how much the companies make from the cloud, what percent of their total revenues are from the cloud, and how much their cloud segments grew in the last year. You'll find that the cloud has been growing fast for even the largest players, and you can probably expect even faster growth for smaller companies. Here's how historical sales growth has been like since 2017 for the top 3 companies. It's been historically fast, but it's slowing down recently because they're already fairly big operations. For investors who don't like to invest in individual companies, here are 3 ETFs you can choose from that invest in the cloud. They're on the NASDAQ exchange. The first ETF is the Global X Cloud Computing ETF, or CLOU. The ETF started in May 2019. It has $1.1 billion in assets under management. It has a 0.68% expense ratio, and it tracks the Index Global Cloud Computing Index. Inside the portfolio, there are 36 holdings. Companies selected are at least $200 million in market capitalization. Most individual names are kept at 2 to 4% of the portfolio weight, and the rebalancing occurs semi-annually. Looking at the ETF's top holdings, you'll notice more smaller or newer cloud players with high growth recently amongst the highest weightings inside. For investment performance, the last 12 months saw 51% growth. From inception, which was a few months longer, it was 56% growth. The second ETF is the First Trust Cloud Computing ETF, or SKYY. The ETF started in August 2011, which is the oldest of the 3. It has $4.9 billion in assets and 0.6% expense ratio. It tracks the ISE CTA Cloud Computing Index. Inside the portfolio, there are 64 holdings, and it's limited to 80 at maximum. Companies selected are at least $500 million in market capitalization. Individual names can exceed 4.5% of the portfolio, and rebalancing occurs on a quarterly basis. Inside, you'll find that the ETF holds larger cloud players amongst the top names. With larger names, you'll find that the growth is going to be less because the companies are already so big, and they have other business segments that are more mature and stable in nature. For investment performance, the last 12 months saw 42% growth. From inception in 2011, it was 354%, which is 18% per year. The last ETF is the WisdomTree Cloud Computing Fund, or WCLD. The ETF started in October 2019. It has $735 million in assets and 0.45% expense ratio. It tracks the BVP NASDAQ Emerging Cloud Index, which is the index we talked about in the beginning of this video. Inside the portfolio, there are 53 holdings. For a company to be included in the index, it has to have a cloud business model, have at least 15% annual sales growth in the last 2 years, and to maintain at least 7% annual sales growth at least once every 2 years when selected for the index. The holdings are equally weighted inside, and they're rebalanced semi-annually. For the top holdings, you'll find that any company, regardless of size, with the best growth tends to make it to the top of the list. For investment performance, the ETF has been around for less than 1 year, and growth since inception has been 90%. So how do you differentiate the 3 ETFs? For the Global X CLOU, you can expect smaller names inside, a more concentrated portfolio, and names have more time to have a bigger influence on the portfolio due to semi-annual rebalancing. For the First Trust, or SKYY, there are larger names inside, less concentration due to a 4.5% weight limitation, and less time for the names to play out due to quarterly rebalancing. And lastly, for the WisdomTree, or WCLD, you can expect names of all sizes, but have evidence of good sales growth. There's an equal weighting concentration, and the names have more time to have influence due to semi-annual rebalancing. So that's all for now. If you enjoyed this video or learned something new about the cloud, remember to like and subscribe to my channel, and I'll see you next time.